Did you know homeowners in California could soon face a $1,000 or even higher surcharge if the FAIR plan runs dry? That's right. This shocking possibility has left countless residents scrambling for reliable fire insurance options. But guess what? This alarming situation isn't just a California problem. It could happen anywhere. So, how can you protect yourself, your property, and your finances? Stick around to find out. Hello, and welcome back to The Penny Plan. I'm Sane, and in today's episode, we're tackling one of the most pressing issues facing homeowners across the country: fire insurance. With the latest news out of California warning of potential four-figure surcharges on insurance policies, it's high time we all arm ourselves with the know-how to protect our homes and wallets. If you want to discover essential facts about fire insurance, everything from how it works to its key elements, plus the top 10 best fire insurance firms in the US, stay with me until the end. Also, if you have questions, thoughts, or personal experiences, be sure to leave a comment and let me know. Your perspective might just help someone else avoid a financial disaster. Let's start with the breaking news that's been on everyone's mind. Homeowners in California could pay a surcharge of $1,000 or more if the state's FAIR plan runs dry. This government-backed insurer of last resort exists to cover properties that otherwise cannot find an insurance carrier due to extreme wildfire risk. But given the recent spate of devastating wildfires causing billions of dollars in damage, the FAIR plan's reserves are under immense strain. Consumer Watchdog, a non-profit group, warns that if a major fire event happens again, the FAIR plan could impose hefty assessments on private insurers, who in turn would pass those costs along to policyholders. That could translate into four-digit surcharges for everyday homeowners. While it sounds like a worst-case scenario, it's precisely what many experts fear is on the horizon. Not only does this situation highlight the rising cost of fire insurance, but it also underscores the potential vulnerability of any state-run insurance pool. If you're thinking, I don't live in California, why should I care? Remember that the ripple effects of any major catastrophe can shift insurance markets and influence premiums nationwide. In fact, states prone to hurricanes, tornadoes, or other disasters face similar risks of overtaxed state insurance programs. So, how can you stay safe and financially secure whether you're in California or somewhere else entirely? That's where understanding fire insurance becomes essential. Fire insurance is best understood as a form of property insurance that covers damage and losses caused specifically by fire. While most standard homeowners insurance policies include some level of fire protection, there are often limits, especially if you live in a high-risk area. And let's face it, if you're in a region repeatedly hit by wildfires, standard coverage may fall short. To put it simply, fire insurance protects your home and possessions specifically against losses due to fire, while a broader homeowner's insurance policy might not extend enough coverage if you face widespread damage. When you purchase additional fire coverage, you may receive the funds needed for replacement, repair, or reconstruction of your property, especially if costs exceed what your standard homeowner's insurance policy covers. In an era of increasingly expensive rebuilding, that extra coverage can be crucial. Before diving deeper, let's run through the key elements that define a typical fire insurance policy. First is the coverage amount, how much you'll receive in the event of a loss. It can be based on either the replacement cost or the actual cash value of your property. Next are the perils covered. These include fires caused by electricity, natural disasters, gas explosions, lightning, and more. Policies usually exclude things like war, nuclear risks, and deliberate fire setting. Also, note that high-value items such as gold, fur coats, artwork, and jewelry might come with coverage caps unless you schedule them separately. Fire insurance is often valid for 1 year and can be renewed upon expiration. Finally, you can buy it as a standalone policy or as an add-on to an existing homeowner's policy. Most people know that homeowners insurance bundles in coverage for fire, but you may not realize that certain coverage caps can leave you dangerously exposed if you suffer massive fire damage. That's where supplementary or standalone fire insurance steps in. Typical coverage areas include the home's interior and exterior, personal belongings, temporary living expenses if your home is uninhabitable, and sometimes liability coverage. When you file a claim, the insurance provider decides whether to reimburse you based on replacement cost or actual cash value. Replacement cost provides enough funds to rebuild or replace items at current market prices, whereas actual cash value compensates you for the depreciated value of your lost items at the time of the loss. Imagine your home is insured for $350,000. Typically, your personal belongings might be insured for 50% to 70% of that amount, so up to around $245,000. But if you own high-value collectibles not specifically listed in your policy, you may be limited by your coverage caps. For some homeowners, the standard coverage is enough. For others, especially those in high-risk areas or who own valuable, rare, or sentimental items, extra coverage provides peace of mind. Moreover, if your homeowner's policy excludes or limits coverage for fire damage, you'll want standalone fire insurance. In states like California, where massive wildfires are increasingly frequent, you may find that private insurers either drop policies or raise premiums dramatically. Then you have the option to turn to the FAIR plan. But, as we're seeing now, the FAIR plan can become financially overburdened, meaning the costs may eventually get passed back to homeowners. The FAIR plan, or Fair Access to Insurance Requirements plan, is meant to be the insurer of last resort, insurance that remains available when no private carrier will write a policy. While it's a crucial safety net for many homeowners, its solvency is not unlimited. The FAIR plan collects premiums and uses reinsurance, but with more people unable to get private insurance, the FAIR plan's potential liability has soared. If claims surpass its capacity, private insurers may be asked to contribute, and those costs could be passed along to consumers. In short, if one large-scale fire event wipes out thousands of properties, every homeowner in California, whether or not they're in the FAIR plan, might share the burden via surcharges on their insurance bills. You may have heard references to 9 states with no income tax. While that might seem unrelated, states with no income tax often compensate by imposing higher property taxes or insurance-related fees. The point is, where you live and the local tax and insurance regulations plays a massive role in your overall financial obligations. So, if you're relocating or currently living in one of those states, make sure you check local coverage needs, especially if you're in a zone prone to natural disasters. At this point, you might be wondering which insurance carriers you can count on. Here are 10 top US fire insurance firms you might consider, along with key points about each. First is State Farm, which offers comprehensive homeowners insurance with strong fire coverage options, known for competitive rates and quick claims processing, and often provides discounts if you bundle home and auto. Second is Allstate, offering both homeowners and standalone fire insurance in select areas, with 24/7 claim support and digital tools for easy policy management, plus safe home discounts and extended coverage for personal belongings. Third is Farmers Insurance, which has flexible policies tailored to high-risk fire zones and multiple coverage tiers, and provides claim-free discounts for long-time customers. Fourth is Liberty Mutual, which offers replacement cost coverage for structure and personal property with additional endorsements, as well as simplified online quoting and a large agent network. Fifth is USAA, restricted to military members and their families but known for comprehensive coverage, strong customer satisfaction, and flexible coverage for high-value items. Sixth is Chubb Insurance, often catering to high-end homes, specialized coverage for luxury items, and premium service with hassle-free claims. Seventh is Nationwide, which typically includes robust coverage, expanded replacement cost, and discounts for protective devices, plus the popular vanishing deductible feature. Eighth is Travelers Insurance, known for flexible coverage, including add-ons for water or smoke damage during a fire, with unique discount programs for protective devices or green homes. Ninth is American Family Insurance, offering coverage enhancements for personal property and detached structures, especially popular for its bundling discounts and high customer satisfaction in certain regions. 10th is Progressive, which partners with various underwriters for comprehensive homeowners and fire coverage, offering strong bundling deals and user-friendly online tools. When choosing among these companies, be sure to look into customer service reviews, coverage limits, endorsements, and local agent availability. If you're in a wildfire-prone area, make sure you specifically inquire about a policy's track record in covering catastrophic losses. Even if you already have decent coverage, take the time to check your home's value annually. Construction costs may rise, and inflation alone can throw off your coverage needs. If you own expensive art, jewelry, or antiques, consider scheduling these items separately with an endorsement. Also, document your home and its contents. Receipts, photographs, and serial numbers can make the claims process smoother. Many insurers offer discounts if you install sprinklers, smoke detectors, or use fire-resistant materials in your home's construction, so be sure to ask your agent about that. People often ask if fire insurance is different from homeowners insurance. While homeowners insurance typically includes fire coverage, the difference is often in the scope and limits. A standalone fire insurance policy can fill in the gaps if the basic coverage is capped, especially if your home is a total loss or you own significant valuables. On the flip side, what is not covered by fire insurance? Usually, it excludes any fires set deliberately by the policyholder. It also only covers losses related to a fire, so if your home suffers flood damage or an earthquake, you'd need a separate policy or an endorsement for that. As catastrophic fire events multiply across the country, insurance companies must remain solvent, leading them to increase premiums. In California, Insurance Commissioner Ricardo Lara has allowed reinsurance costs to be passed along to consumers, and Consumer Watchdog estimates that home insurance rates could spike by 40 to 50%. That's a big jump, especially for families on a tight budget. But knowing these trends in advance can help you plan better. In some cases, like the fires being investigated in Altadena, an electrical transmission tower or utility company might be found at fault. If that happens, the state's utility wildfire insurance fund could come into play. It still doesn't prevent a potential spike in homeowner insurance costs, but it might affect how claims are settled and how the overall burden is distributed. For many homeowners, a standard homeowner's insurance policy is sufficient to cover fire-related losses. But for those living in wildfire-prone areas or those with high-value possessions, it's worth considering additional coverage. The FAIR Plan situation in California is a reminder that if catastrophic events keep happening, any large insurance pool can become overburdened. The possibility of a $1,000 surcharge is a stark warning that these systems can buckle under extreme stress. If you want peace of mind, especially if you live in high-risk regions, exploring extra fire insurance coverage is a wise move. Ultimately, you must weigh the premium costs against the potential for catastrophic loss. Nobody likes paying for insurance, but losing your home to a fire and not having the right coverage can be devastating emotionally and financially. Ready to secure your financial future? Here are some steps you can take today. First, review your existing policy to see if it fully covers you for fire damage. Second, consider standalone fire insurance if you're in a high-risk zone or own luxury items. Third, shop around. Look at the top 10 companies mentioned here, assess their quotes, and read reviews. Fourth, stay informed about news related to surcharges in your state. And fifth, safeguard your home by installing smoke alarms, maintaining defensible space, and considering fire-resistant materials. I'm Sane, and you've been watching The Penny Plan. If you found this helpful, smash that like button, subscribe, and ring the notification bell so you never miss another financial tip that could save or make you money. Have a question or personal story about home or fire insurance? Drop it in the comments below. Your experience could be exactly what someone else needs to protect themselves from financial ruin. Until next time, stay safe, stay insured, and keep planning those pennies, because every penny you plan for is a penny you won't lose.